I tell people, you go back, you look at how many grams of gold you could buy 70 years ago in dollars. Now you can buy 99% less. So fiat currencies, as I've said many times, they always go to their intrinsic value of zero. Ultimately, we are in a situation where gold and silver become like investments because the monetary situation is really precarious, in my opinion. They've inflated so much the system that gold and silver become like an investment and not money, only because the fiat currencies lose a lot of value.
In financial markets and economics, MarioInnecco asserts that fiat currencies are inherently inclined to trend toward their intrinsic value of zero. Against excessive inflation, he positions gold and silver as prudent investments. Notably, the US dollar has seen a concerning 98% loss in purchasing power since 1971, as reported by Visual Capitalist. The Federal Reserve Act of 1913, empowering the Federal Reserve Bank to manage the money supply, has not prevented the currency's decline amid a surge in circulation. Innecco, rooted in a preference for traditional hard assets, remains focused on gold and silver, despite the cryptocurrency boom. Despite Bitcoin's remarkable rise, he prioritizes the reliability of physical assets. The Kitco News Weekly Gold Survey indicates a disparity in sentiment, with retail investors expecting gains while market analysts turn bearish or neutral on gold's near-term prospects. Furthermore, recent statistics underscore a minimal allocation to precious metals, with a mere 1% or less of assets managed by 70% of fund managers invested in gold, silver, and mining stocks. Given the substantial circulation, Innecco emphasizes the potential impact of even a small percentage of funds entering this sector. While gold is considered the ultimate insurance against economic uncertainty, Innecco suggests silver is a more speculative investment. Historical data supports this notion, with silver exhibiting a notable 233% price increase in the 3 years from December 2008 to December 2011, outperforming stocks, property, and even gold. Before diving into MarioInnecco's insightful interview, subscribe to our channel and give this video a big thumbs up.
I'm always of the opinion that investment is not just buying securities in the stock market or bond market, is investing in yourself and also in your family and helping friends maybe. But if you're fortunate enough to have extra savings, yeah, I'm sticking with real money, physical gold and silver, a little bit of miners, gold and silver miners. I think commodities, hard assets are interesting as well. I think the world is focused too much on technology and finance for too long, and even if we see correction in the overall market, you could see a lot of people trying to find alternatives, and that's why I think gold, silver, and hard assets, commodities are a good place to be. But yeah, I would say ultimately we are in a situation where gold and silver become like investments because the monetary situation is really precarious, in my opinion. They've inflated so much the system that gold and silver become like an investment and not money, only because the fiat currencies lose a lot of value. So yeah, that's how I see it. I don't look at crypto that much. I know people always ask me, but you have to choose one over the other. Some people say, oh, you choose both. And I know Bitcoin has gone up a lot, but I'm sticking to hard assets. Gold knows that they're going to have to keep inflating the system. Some people think they might want to bring it down in a deflationary collapse, but I think politically that would be really difficult because you let everything go down like that, you have a Great Depression very quickly, and politicians don't like that. So I think that's what gold is saying, that ultimately they'll have to pivot, as it's called. And the other thing is, yeah, I think the market doesn't buy a lot of these CPI numbers, investors. And even though bond yields have gone up, real rates are not as big as people think. And I guess also all the other central banks, non-Western central banks, they're loading up on gold at a record pace in the last 2 years. So that's keeping, the price of gold quite elevated. But the other thing I tell people, you go back, you look at how many grams of gold you could buy 70 years ago in dollars. Now you can buy 99% less. So fiat currencies, as I've said many times, they always go to their intrinsic value of zero. So that's the other reason. And the problem is that most people in the mainstream economic press and economists, they don't look at gold and silver as money. So I'm seeing a lot of people saying, "Oh, it's puzzling that gold is going up." But to me, it's not. I think there's some statistic that came out recently that 70% of fund managers have less than 1% of the assets they manage in gold. So yeah, it's very, very small. And the same thing goes for silver, of course, and the miners. And even if you only have a small percentage of all the funny money that's been created go into that sector, it's going to make it really yeah, and make a big difference on the value of those assets.
The current U.S. inflation rate stands at 3.24%, decreasing from last month's 3.70% and a significant drop from the 7.75% reported in the previous year. MarioInnecco argues that the driving forces behind inflation are the central banks and the federal government, which operate in a reciprocal manner and influence each other. Despite a robust U.S. labor market, where 199,000 workers were added in November, exceeding the expected 180,000, and a lower than expected unemployment rate of 3.7%, the Federal Reserve is anticipated to implement a series of interest rate cuts next year. While this adjustment might be delayed until May, the strong labor market performance doesn't seem to deter the potential shift in monetary policy. Innecco emphasizes that, despite recent tightening and quantitative tightening by the Federal Reserve, the dynamics of an election year in the U.S. and the upcoming one in the U.K. could drive additional fiscal spending. Let's get back to the interview.
I mean, I think it was in 2022, the U.S. economy, was in a recession the first 2 quarters, but they changed the definition. The markets definitely seem to be saying that, with the drop in yields, not just long-term yields, 2-year yield has dropped a lot, with some of the economic indicators now looking weaker. It's possible, but it's also an election year in the US and in the UK next year. So you can bet that despite the fact that the Fed's been, relatively, tight of late, they're still doing QT. You can bet that maybe Congress or the White House, they'll push for more fiscal spending. Because I think that's one of the reasons why the economies have kept going. So anything's possible. They can fudge the numbers as well. Again, we could have negative GDP for 2 quarters, but they could change the unemployment numbers and say, look, unemployment is still low. That's what they did in 2022. So we don't have really a recession. But I think it's kind of irrelevant. I just think the general population is suffering. Yeah, I think Biden said the other day he blamed the companies, corporations for keeping prices too high. He said, wow, inflation has come off, so you need to cut prices. But in my book, the only people that can create inflation, one is the central bank and the other is the federal government, because they scratch each other's back. It's not corporations. They're just reacting to a weaker currency. They're earning less in real terms and they're paying more for the inputs, and that's why prices go up. So as I said, I don't think it's that important if there's a recession or not, but I think people are feeling it. To be honest, don't really care much about the stock market because I'm not really invested that much in it. They could keep going, markets, can do things that seem irrational for a lot longer than people expect. I remember in 03, 04, most people were saying, these markets can't keep going up, but they kept going for another few years. Eventually these magnificent seven, they will turn around and they'll have a huge impact on things because the other components are not really doing that well. when they do it, I'm not, I'm not really sure. Maybe if bond yields start rising again, they could.
Gold and silver prices are posting strong losses near midday Friday in the aftermath of a U.S. jobs report from the Labor Department that suggests the U.S. economy is in a pretty good spot. Gold prices hit a 2-week low today, and silver a 3-week low. Both markets are headed toward technically bearish weekly low closes on a Friday. How might the current economic optimism influence the trajectory of precious metal prices in the coming weeks? Share your thoughts in the comments below. If you liked the video, please subscribe to our channel and remember to activate notifications by hitting the bell icon. Your participation means a lot to us. Thank you.